Breaking news. Everyone, Circle, the fintech firm behind the USDC stablecoin, has raised $1.05 billion in its upsized initial public offering. The company initially targeted a valuation of $4 billion in its IPO, which was up from its Series E valuation of $875 million. But now, after strong demand for the IPO, Circle has increased the size of the deal and priced its shares at the top end of the range. At the top end of the range, it's giving the company a market cap of around $9 billion, so quite a bit higher than the $4 billion that they were initially targeting. I think there's a lot of things to unpack here. There's a lot of reasons why this is important. And so, let's get right into it. Circle raises $1.5 billion in its US IPO. They are now a public company. They went public on the New York Stock Exchange under the ticker symbol Circle, and the stock actually started trading today before it officially starts trading tomorrow. But the stock is up 2% from its IPO price already. Now, what's interesting about this is that they priced their IPO at $9 per share, which was the top end of their range. This implies a valuation of around $9 billion. But just a few months ago, in October, they were valued at $4.7 billion when they raised equity from private investors. So, their valuation has more than doubled in just a few months. What's even more remarkable is that they were only valued at $875 million back in April of 2021. So they've seen astronomical growth over the past year and a half. But even though they have grown very quickly, they haven't necessarily done so at a high burn rate. They're not like many of these crypto companies that have massive expenses and are burning cash at a rapid pace. In fact, in the first quarter of this year, they had a net income of $143 million, and they had $166 million in cash and cash equivalents. So they have a ton of cash on their balance sheet. Now, it's worth noting that Circle isn't profitable yet, but they do expect to become profitable soon. They expect their adjusted EBITDA to be between $250 and $275 million this year. And if we annualize the first quarter's net income, that puts them on track for a net income of $572 million. So they should be more than profitable by the end of the year. And with this IPO, they didn't just raise capital, they also acquired a public shell. Because of the way the SPAC merger played out, Circle now has access to a public shell that they can use to acquire other companies. According to the Wall Street Journal, one of the first companies that they may acquire through the SPA, which is a cryptocurrency exchange that they purchased back in 2019 for $400 million. It's currently unclear how much they would pay for Poloniex, but it seems like they are moving forward with the acquisition of Poloniex as one of their first moves as a public company. So all in all, this is great news for Circle. They are raising a ton of money, and they have a ton of capital that they can use to grow the business. We'll be keeping an eye on them to see how they continue to grow in the future. Before we go, I'd like to quickly talk about our sponsor for today's video, Coinbase Ventures. Coinbase Ventures is the investment arm of Coinbase, the largest crypto exchange in the United States. Coinbase Ventures was founded in 2017 and invests in early-stage crypto and blockchain companies. They have backed some of the most innovative projects in the space, including Ava Labs, Blockchain, Con, Circle, Crypto.com, Ledger, Live Nexo, Paxos, Solana, and many others. Coinbase Ventures has a strong track record of backing successful projects, and they have a team of experienced investors who know the crypto space extremely well. If you're looking for a VC that can provide you with funding, guidance, and expertise, then I highly recommend checking out Coinbase Ventures. You can find more information below. With that said, until next time, see you later.